We all know the AI revolution is here, but what you might not know is its secret weakness. It is incredibly hungry for power. So today we're going to dig into Bloom Energy, a company that says it has the answer. The big question we're exploring is, could this company actually be one of the key players powering the whole AI boom? Okay, so to really get what Bloom is all about, you've got to understand the problem they're trying to solve. And it is a huge one. Think about it. All these AI models, all these massive data centers, they are just guzzling electricity. We're not talking about just plugging in a few more computers here. This is a massive, fundamental jump in how much power the world needs.
And right here, this image, it shows you the real bottleneck. Our power grid, the one we've had for decades, it just wasn't built for this. It's struggling to keep up. You can't just snap your fingers and build a new power plant. That takes years. But AI, it needs that power right now. And that gap, that's what everyone in the industry is talking about. They call it the time to power problem.
So what's the fix? Well, this is exactly where Bloom Energy comes into the conversation. They've got a solution that kind of sidesteps the whole grid problem. You can think of it as basically a power plant in a box.
All right, so here's their official mission: to make clean, reliable energy affordable for everyone in the world. It's ambitious, for sure. But let's zoom in on that word reliable. If you're running a massive data center, you literally cannot afford to go down for even a second. So for their customers, reliability isn't just a nice-to-have, it's everything. So how does this power in a box actually work? What's the magic inside? Well, the core tech is something called a solid oxide fuel cell. Now, don't worry, we're not going to get all sciencey here. The best way to think about it is, it's not like a normal generator that burns stuff. Instead, it uses a chemical reaction to create electricity directly. The upshot, it's way more efficient and a whole lot cleaner.
And here it is. This is the actual product, the Bloom Energy Server. It's a system made up of these modules, and they can just deliver it right to the customer's location. The key thing to get here is that it's its own little power plant. It sits right there on site, right next to the data center or the factory that needs the juice.
Okay, this slide really gets to the heart of why a company would buy this. Let's run through it. First up, fast power. They can get one of these up and running in as little as 90 days. Just think about that. Compare that to the years it takes to get a traditional power hookup. That right there is the game changer. Then it's scalable. So as a business grows, they just plug in more boxes. And maybe most importantly, it can be totally grid independent.
All right, so the tech is cool. We get what they sell. But how do they actually get paid? Let's take a look at how they make their money.
It's actually pretty straightforward, kind of like a 1-2 punch. First, they make money by selling the energy server itself. That's the big upfront payment. But then, and this is really important for the stability of their business, they sign these long-term service contracts. This creates a steady, predictable flow of cash, a lot like a software subscription you might pay for.
So who's actually handing over the money for these things? Well, their customers are in 3 main groups. You've got the one everyone is focused on right now, the big data centers, the AI companies. But they also have a really solid customer base in what's called commercial and industrial. We're talking manufacturing plants, hospitals, even big retail stores, anybody who absolutely cannot lose power. And what's interesting is that even the traditional utility companies are starting to become customers.
Now get this, the CEO said that over 2/3 of their business comes from repeat customers. That's a huge deal. I mean, think about it. When your customers are so happy that they keep coming back to buy more and more, that tells you something really important. It means the product works and it's doing what they promised it would do. Okay, so the story sounds pretty good, right? But you know what they say? Talk is cheap. We need to see if the numbers actually back it up. So let's do a little financial health check and see if this solution is really gaining traction. Let's start with the big one, revenue. They just hit a record $2 billion for the full year. And that's not just slow and steady growth. We're talking about acceleration here. That's a jump of more than 37% from the year before. Wow. And this chart really paints the picture. You can see that steady climb, right? $1.5 billion, then $2 billion. But the really interesting part is what management is forecasting for the next year. They're guiding for somewhere between 3.1 and 3.3 billion. When a company's leadership puts a number like that out there, it means they're feeling incredibly confident about the deals they have lined up. Now, growing revenue is one thing, but are they making more money on each sale? That's where this chart comes in. This shows their gross margin, basically how much profit they make from each dollar of sales before other expenses. And as you can see, that percentage is climbing. That's exactly what you want to see. It means they're getting more efficient and more profitable as they scale up. Okay, let's pull all the key numbers together here. We've got the great revenue growth, the improving margins, but I really want you to look at the backlog numbers. Backlog is just a fancy word for signed deals, business they've already locked in. It's a peek into their future revenue. And look at these numbers, $6 billion for products and a whopping $14 billion for services. That gives them a ton of predictability. Plus, with $2.5 billion of cash in the bank, they've got the money they need to get it all done.
So the numbers are looking pretty solid, but numbers only tell you what's happened. What about the future? Let's see what the view is from the top. What is management saying about what's coming next?
You can't get much more direct than this quote from the CEO, K.R. Sridhar. AI is a huge tailwind for the power industry and a big catalyst for Bloom's growth. So it's crystal clear. They don't just see AI as some passing fad. They see it as the main engine that's going to be driving their growth for years to come.
So let's look at the good and the bad, what management calls the tailwinds and the headwinds. The tailwinds, the things pushing them forward, are pretty obvious. You've got that massive AI demand. They're doubling their factory capacity. But they were also honest about the challenges. Their growth outside the US has been a bit slow, their profits can bounce around a bit, and of course there's always the risk of competition.
All right, we've covered a lot of ground. The tech, the business model, the financials, what management thinks. So how do you put it all together? Let's boil it all down into the bull case versus the bear case, the argument for and the argument against.
Okay, this is your framework for how to think about this company. The bull case, the optimistic view, is pretty simple. They seem to be in the perfect spot to benefit from the AI power crunch, and their numbers show they're getting the job done. Now, the bear case, the reason for caution, is all about risk, and the biggest one is customer concentration. Check this out. Almost 70% of their revenue last year came from just 3 customers. That's a lot of eggs in one basket. Plus, can they actually build factories fast enough to keep up?
And ultimately, it all comes down to this one big question. You really have to ask yourself, is this technology, this on-site fast power, the actual future of how we power our most important buildings, or is it just a clever temporary patch for a grid that's struggling right now? Basically, is it a permanent solution or just a bridge? Your answer to that is probably the key to figuring out where this company goes in the long run.
And as always, we have to end with our most important point. Remember, this whole overview was just to help you understand the company. It's for educational purposes only. It is absolutely not financial advice. You should always do your own deep dive research before making any kind of investment decision. It's your money, after all.